Hello everybody, Brian here, quantlabs.net. Today is July 17th, 1:30 p.m. And I want to go over a few things regarding gold and whatnot. So let's get to the screen just so you know. We've got a new offer page here if you want to get your portfolio evaluated. No cost, just fill in your info and it won't cost you anything. But it does take time to do. So I'll probably send me over your instruments, and I'll let you know which ones are the laggards, which ones to optimize with the weightings, and I'll gladly see what we can do for you. All right, and also we don't sell our information as well or release it. All right, so let's get into MotiveWave right now. So right now you're looking at the Oanda data. I just find it easier than Interactive Brokers for now. Right now, I just wanted to show you some of the gold XAU. Nice thing I also like about Oanda is that you can get gold in different currencies. So you can measure the strength of a currency with the gold against that currency. So for instance, if you know you have a strong, an accelerating currency, that's strengthening right there. Euro not doing too hot, as you know, the parity against the British pound and so on, and same with the pound. But the one indicator globally that is the most reliable, and I've only seen this in Oanda, is the gold-silver ratio. You can see that's climbing. So that's a 4-hour view, okay, up to on Friday. But if you were to look at the daily, you can see it's starting to really climb. That's risk in the global market. Okay, so it's starting to really take off from 78 to all the way up to 93. So the risk in the market is starting to increase. How do I know that? If you look at the monthly view, when you look at all the different major global events in terms of catalysts that can kill off markets and economies, you can quickly see here that in 08 that spiked, but compared to since then, you can see it did come down as they pumped a lot of liquidity into the markets, and starting in right here in May 2011 it started to move up, and that's, let's compare that to the S&P 500. But when the pandemic started right around here, December and January, February, boom, it spiked, and then it came back down. But now we're starting to see it really build up, which I would consider as a worrying sign. But that's just gold and silver. But we're here to learn about gold. I just want to show you that these indicators can be very, very good to know. All right, so let's take a look at, as I said, I've talked about gold and the different currencies. So the big one we want, and again, I'm using MotiveWave here, okay? So I like MotiveWave for a variety of reasons. Now, I don't have GLD ETF because it's not Interactive Brokers, so the only one I would use that's equivalent to that is gold and US dollar. So you know about gold is increasing with the US dollar, so as the US dollar goes up, gold comes down. Okay, because now people are moving into US dollar. If you look at the DXY, you'll see it's strengthening. Okay, and it was weakening for a while, and now it's starting to strengthen again. So depending on which side of the argument you want to is better, I do think that gold is not the best indicator. And how do I know that? Well, if I blow this up full screen, you'll see here that gold did go up during the invasion here. Well, it really started to take off sometime in February. Actually, no, it was 2019. So it just moved up. We'll leave it at that. But right here, January, February. Now, this is the thing I don't like about gold. Okay, gold is not a place for a safe haven. Why do I say that? When gold went up, it did spike. Okay, so it went up to, let's see here, 1805. It peaked, let's say here at night. So it went up about $100, and maybe 200, like maybe 2,000, and it's dropping back to 1,700. So now your price of gold is lower than it was in February. So it does move up when things start to strengthen. The only problem here, as I said, is the US dollar that's not enabling this to go up. But if the US dollar does weaken, then maybe gold is something worth looking at. But long term, you can see here all the way from 2008, from $600 to $2,000. That's a pretty good investment. That's over 2008. That's what, 14 years? My math correct? So it's gone up 4 times. But when you look at other instruments that have done that, maybe like Bitcoin's a great example, and that's why people have given up on gold. But when it comes to extreme catalysts in the market or global market, yeah, gold is good to have, but when will that take place? I don't know. But if you have physical gold, yeah, hang on to it, because it will go up. There's no doubt on that. But in the meantime, you will hit these drawdowns. And again, this is a 1, 2, 3, 4 month drawdown because of increasing US dollar. So the famous question is, what's going to happen now if I use the premium study here called Hearst cycle? I can get a fairly decent picture on what this entails. So here I'm just going to enable all options so you can see it. I'll do the different views. Excuse me. So, what are we looking at right now? So you can see gold did spike during that Russian invasion in the Ukraine, and it's come back down. And look what happens when gold goes flat. It still goes up, but the one thing to watch is, will gold continue to move up? According to this, it will. When will the next reversal be? And this is just a guesstimate, but it's pretty accurate. Right here you can see it reversed here on these 2 diamonds here, so that was back in 2018. Another reversal right here, let's say. So it's kind of a classic buy the dip. So that's March 2020. And when will the next one be? Well, we have one here. That's estimating December 2022. And that could make sense. I mean, that's when the new Congress gets voted in, right? And the one after that will be right here, June 2024, maybe. Could be a lead up into the election of the presidency for the US. So historically, I've never tried gold like this, but this could be fairly accurate. So these are reversal points. So come December, maybe get into gold and into the political catalyst for the US government, because they become important. So as let's say the political concerns pick up after a certain party's voted in, gold may go up because of that, and there might be a short-term bump because of that. Same with the presidency as well. And I'm not saying, but that would make sense. Now let's take a look at a more short-term cycle here. So here this takes us back to February. So we're on a daily. Let me go to a weekly. So the weekly, we have March. So what happened in March? That was the invasion of, was that March 2022? No, it's 20, I don't, oh, that's the pandemic. Okay, right. So the pandemic moved up. Once the pandemic kicked in around, let's say, January, and when it got serious, right here, that's when it started to pick up, because the economy was tanking, the market was tanking as well. So here, as I said, you can see that gold did spike up again around February of this year, and I'm always saying refer to here. Right here, February, and it did spike, but this is the problem with gold long term, is it drops back. So this is the problem with gold, okay? Don't put a lot of money into gold. The only thing I'd use gold for is physical gold for when the world ends and we have an asteroid hit us or something like so extreme. But here, this is what we're looking for. These 1, 2, 3, 4 diamonds for 4 different reasons. If you study the Hearst cycle, study to see how it works. But there's 4 here, and that it was in March. So that's pretty dead accurate when the lockdowns started happening. And again here in August of 2021. That I'm not sure what happened there, but this is where it breaks down. Okay, so again, when you start to see these breaking down, you would expect this reversal to go back up. Didn't happen. So that shows you there's a problem there. Here's our next one is for January, February next year. Again, will it break down? I don't know. Here's with 3 diamonds, so that is in May. Again, going into the daily ahead, I don't think it'll really matter. You can see here, we've got on February 24th when it did spike. Here, okay, this one looked pretty good. So that's May 16th. So the next one's right here in July. So these are cycles. So obviously all these big events are, we'll call them exogenous, and have nothing to do with just normal trading patterns of gold. Okay, so again, I use the charts, and it's very hard to predict what gold will do. Okay, so I'm going to leave it at that, and there's a number of stories I can comment on that I put up on my quantlabs.info server, and that is right here if you want to learn more. I do news. Go to quantlabs.info, just log in, and every few hours I'm updating the news right here in the newsroom, and in here you will get the ability to see mostly crypto, because crypto's still a lot of opportunity there compared to anything else, like fast returns compared to gold over 12-14 years from 2008 to 2022. So yeah, I mean, but there is some news on, you can see here Coinbase and ECB news. So there's a lot of economic news, gold and so and oil and whatnot. So there's some good mix of that. Oil demand going up, so and so forth. Okay, it's just to let you know. And again, if you want to know more about this is quantlabs.net/info. Sorry, quantlabs.net/portfolio. Okay, so go to quantlabs.net/portfolio. I put it in the description. You can fill out your info, and I'll try to do an assessment on your portfolio. Just send me your instruments. That's it. That are comparable to Interactive Brokers, the equivalent, and not descriptions and all that. I need the symbols of Interactive Brokers. All right, we'll leave it at that. Thanks for watching. Have a good day.